Hey everyone, welcome back to Financial Futures. Today, we're diving into a historic moment. Donald Trump has officially won the White House. This news has had a huge impact on the markets, with a surge in both stocks and cryptocurrency as Wall Street reacts to Trump's expected economic policies. We're going to break down what all of this means not just for the stock market, but for your wallet. In this video, I'll cover 3 key things. How Wall Street and global markets are reacting to Trump's win. What potential economic policies could mean for specific industries and sectors. And most importantly, how you can position yourself financially to take advantage of these changes. Remember, we're not here to get into the politics. This video is all about how Trump's presidency could impact your investments and financial strategies. Right after the announcement, we saw a huge spike in the stock market. The Dow Jones surged by over 1,000 points, with the S&P 500 and Nasdaq showing similar gains. Bitcoin also reached new highs, signaling excitement across traditional and digital assets. Why is this happening? Wall Street's optimistic response is based on expectations. Trump's presidency brings the possibility of pro-business policies, tax cuts, deregulation, and new economic spending. Investors are betting that these policies will create growth opportunities for businesses, especially in sectors like energy, defense, and financial services. But what does this mean for you as an investor? This enthusiasm creates short-term opportunities, but it's important to stay grounded and think long-term. We've seen similar patterns before where initial market spikes don't always translate into sustainable growth. So be cautious and don't get too swept up in the moment. Now, let's talk about the main policy areas Trump has highlighted, which are likely to affect the economy and stock market in specific ways. Here are the 5 key areas investors should keep an eye on. Trump has stated he'll focus on reducing regulations in key industries. Deregulation means less government intervention, which could allow financial institutions and energy companies to operate with fewer restrictions, potentially increasing profitability. This is why stocks in these sectors have surged. For energy, this could mean expanded oil and gas production, which Trump believes will lower energy costs domestically. Lower energy costs can reduce expenses for businesses and consumers, theoretically helping the economy at large. Financial services might see relaxed regulations, which could boost lending and investments within the industry. Trump has also mentioned bringing jobs back to the U.S. through increased tariffs on goods made overseas. This could impact sectors like automotive manufacturing, tech, and other import-heavy industries. If tariffs are raised, the cost of imported goods may go up. On one hand, this could bring some manufacturing jobs back to the U.S., but on the other hand, higher prices on goods might hit consumer wallets. For investors, this creates both risks and opportunities, especially in companies that rely on domestic production. Another area Trump has pledged to prioritize is defense spending. This means aerospace and defense companies could see increased demand, which may drive growth in this sector. Think of it like this. More government contracts for defense companies can lead to more consistent revenue for these companies. So, if you're looking at sectors that could benefit directly from government spending, defense is one to watch closely. One of Trump's signature economic goals is cutting taxes. He's expressed interest in extending or even enhancing the Tax Cuts and Jobs Act, which reduce tax rates for individuals and corporations. Lower taxes can potentially mean more cash flow for corporations to reinvest in growth, pay dividends, or buy back shares, all of which can be beneficial for shareholders. Keep in mind, though, these changes will likely take effect in 2026 at the earliest, so it's a longer-term consideration. Trump has also mentioned plans to curb illegal immigration. From an economic perspective, reduced immigration could decrease demand in areas like housing and public services, potentially affecting prices. This might create opportunities for homebuyers if demand cools, but it's a nuanced issue. Lower demand could lead to lower rental rates in certain markets, but it could also impact businesses that rely on immigrant labor. Again, there's a balance, and we'll have to see how this plays out in the real world. To sum up, Trump's presidency is likely to have a strong influence on certain sectors, especially financial services, energy, and defense. But it's also important to remember that these changes will take time to fully unfold. If you're a long-term investor, these shifts may present opportunities, but don't overreact to short-term market movements. For those of you with a diversified portfolio, remember that staying the course has historically been a winning strategy, regardless of who's in office. The market has always gone through cycles, both ups and downs, with presidents from both parties. So, to wrap it up, Trump's win has the potential to bring significant changes to the economy, but stay focused on what matters: your personal financial goals. Pay attention to these policy shifts, but remember that consistent, long-term investing is usually the best path to financial success. Thanks for watching Financial Futures. Be sure to like, subscribe, and hit that notification bell for more updates on economic news, investment strategies, and financial insights. See you next time.